So welcome to this Travel Weekly webcast on Atol reform, one of our Future of Travel series. I'm Ian Taylor and I'm joined today by Michael Budge, Head of Atol at the Civil Aviation Authority, by Alan Bowen, Legal Advisor to the Association of Atol Companies, although today speaking in a personal capacity, Rachel Jordan, Director of Financial Protection and Membership at Abta, and Sarah Lacy, who's the Director of Serenity Travel Trusts. Welcome, everybody. Thanks for coming along today. We're going to hear first from Michael, who's going to update us on the latest CAA thinking. Michael.
Thanks, Ian. So yeah, I'll just take a few moments to make a few opening remarks, and then I guess we can delve into perhaps the more interesting discussion areas. So I think, first off, really important to say that, as a regulator, one that does face into a dynamic industry, really important that we keep our areas of regulatory focus under review and particularly identify where improvements can be made and for the benefit of the public. And so from an Atol perspective, at the very core of our proposals to reform the Atol scheme is an objective for the benefit of consumers ultimately to increase the financial resilience of not only the scheme, but also of the wider travel industry. Now, our consumer research that we indicate within our latest document that we published tells us that consumers expect their travel company will deliver their trip, and consumers also favour the financial vetting of their travel companies. And consumers also tell us that they want their travel company to be financially resilient. And some also point out actually that companies should have some sort of contingencies or other frameworks in place to be able to deliver the trip that they have booked. And going back to our first consultation that we launched, the responses to that also indicated that there was a consensus that some form of change to the Atol scheme was necessary, and that included a change to the current APC rate. So our latest document, and probably what we're going to spend most of the time talking about now, really is about requesting additional information, but also providing stakeholders with an update on our thinking. Hopefully what it intends to do is provide some clarity on some matters that we felt were needed after our first consultation, and specifically also ask some focused questions around issues that have been raised with us during the course of the process to date, as well as also providing stakeholders the opportunity to understand our planned approach and comment upon our approach to appraising those options. And importantly, this really is the opportunity for stakeholders to have their say and help bring this together as we look to develop the final proposals. But as we've said, we're clear that changes do need to be made, and that for some Atol holders, this may mean having to look more closely at how they use customer monies. We've indicated within our latest document that some form of segregation of funds is our emerging preferred option, but as is stressed, it is important to note that no final decision on the matter has been made. This is really about collecting in evidence and views from stakeholders. And we recognise that the businesses within the travel sector have different structures. They have different ways of operating and doing things. And reflecting on that, what we need to try and do is bring together those differing views and identify a way in which we can make changes that are viable across the sector, recognising that diversity and that vibrancy of the sector. And that's for the benefit of consumers. We want to continue to support and see a competitive and vibrant industry ultimately delivering for the consumers. We also know that there are questions surrounding implementation date and transition. That's why in our latest update, we've signalled our intent to introduce changes potentially from April 2024, so from April next year. But importantly, we still recognise the need for a transition period and the time that is needed for businesses to adjust. So I think really kind of leaving sort of clear messages. One, this really is a request for industry to comment and provide their views. No decision has been made. We really want to hear all perspectives, and ultimately to help us get the reform of the scheme right, we'll be listening to all the evidence that is submitted. The closing date for information to be submitted is the 24th of March, so not long from now. So for all of those people who are watching this who have yet to submit their views and feedback on this, I urge everyone to do so, as we will be taking careful consideration of all those views presented to us.
Okay, thank you, Michael. You say that the changes do need to be made. When you spoke at Abta's Travel Finance Conference recently, you said this is potentially the largest ever Atol reform. So is there a need for the largest ever Atol reform?
Well, I said potentially, it could be. Ultimately, at the end of the day, we believe and we consider there is a case for reform. We've proposed a number of different changes around both the licensing framework and the framework by which businesses might be directly protecting the monies that they hold and receive from customers, as well as changes to the APC rate. So in total, we see that as potentially being the biggest change to the Atol scheme in its history, its 50-year history. But ultimately, it depends upon the final decision and the final proposals that are implemented. But it's really important that we consider what is right for the industry as it evolves and continues to evolve, and to make the scheme fit for the future, as I mentioned earlier, a dynamic industry. So potentially it could be considered to be quite a substantive change from how the industry has effectively started and grown up through the regulatory framework.
Okay, we'll talk about the specifics in a moment, but Alan, can I come to you? Do you believe there's a case for the change of this order, potentially the biggest in the Atol scheme's history?
Well, that's a very good question. And the CA talk about improving resilience. If you actually look at what's happened in the last 3 years, we've gone through the worst crisis that the industry's ever had since Atol began in the mid-70s. They've survived. And the reality is the industry is phenomenally resilient as it is. Now, is it completely resilient? Could it cope with another Thomas Cook failure? No, clearly not. I think that's one of the issues that we need to look at and see how we actually deal with certain specific types of Atol holder who are the big risk. What we're lacking is any evidence of any action to protect airlines. When you look at what's been the biggest problem the last 3 years, it's been the fact that most Atol holders had problems getting money back from airlines. We've had airline failures. We've had airline failures after 9/11 during the Icelandic ash cloud, and there is nothing happening at all. After the Monarch failure, the government said they would do something. They set up the Bucks Committee. They reported before Thomas Cook failed, and yet here we are 4 years later, and we're nowhere down the line. If you look at what Thomas Cook, for example, if the airline itself had had protection, the cost to the Atol system would have been much lower because there would have been protection in place for the airline, but there wasn't. And we clearly need to look at the Atol holders who've got their own airlines, an integrated operation. They need different forms of protection. But does everybody else? Well, I'm not convinced that they do. The reality is they have been phenomenally resilient, as has the Air Travel Trust. It started this year with over 100 million in the bank. There'll probably be another 60 million going in this year. There's an overdraft of 75 million. So that, there's in excess of 200 million pounds available by the end of this year. And very, very few Atol holders are going to cause a problem for that amount of money. The reality is most Atol holders cost very little when they fail. Most people are small businesses. They're not the ones who are going to benefit from the change to the pension rules yesterday, allowing you to save more than £1 million. Perhaps the Atol or Abta might be falling into that category, but nobody else running a travel business is going to be in that situation. I mean, the reality is we are so resilient, the government don't seem to think there was any need to provide protection during the pandemic. And I think we have to look very carefully at whether we're throwing the baby out with the bathwater. The system has worked very effectively with notable exceptions, and they are all in relation to Atol holders with airlines for more than 50 years. And we're not sitting there spending customer money without reason. The money is spent because we have to pay the airline within 72 hours of making the booking. We have to pay the hotel before the passengers travel. I suspect very few hotels now give credit even to the largest travel companies because they can't be certain that they're going to get paid.
Okay, Alan, you've raised a lot of points there, and I'll give Michael a chance to come back on a couple of them in a moment. But Rachel, You were nodding at the start of Alan's remarks. I mean, the industry has proved remarkably resilient, hasn't it?
Yeah, I think it definitely has. I don't think you can say that it hasn't. COVID was, a phenomenally difficult period for the travel industry, and I don't think we've seen anything like it before. And maybe we'll see something like it again. I'm not so sure. I think I was nodding with Alan because I agree with his opening points around the resilience of the industry and also the resilience of the ATTF. And I think there have been two large failures, Monarch and Thomas Cook, in however many years in the past. However, the ATTF was there; it was resilient through it. Yes, it took a hit, but it was there and it worked. Those things don't happen often. And I think what's happening is the ATTF is proving itself to rebuild quite quickly. And so, in terms of there being a clear case for reform, I would challenge the assertions that the ATTF has a resilience issue. Obviously, the fund needs to be bigger, but I don't think there's a resilience issue in the immediate term. And I don't think the industry is showing a resilience issue either. So I think where we're at is we seem to be kind of lacking evidence that there is that resilience issue. And the point to make around Monarch and Thomas Cook is that there wasn't a taxpayer impact in those failures. And all of the work around Atol reform is ultimately about protecting the end consumer. And I'll get into a bit of our thoughts around how that can be achieved later on when you open up to more questions. But I think that's a key point to make before we go into that any further. The only other thing I'd say around turning to airline insolvency is, that is an issue for many members and it does need to be addressed, but I think it needs to be addressed by the DfT. And I don't think an Atol, it's something to be solved through the Atol scheme itself. I think that, it's an issue, it needs to be addressed, but I don't think it's for the CA to address through the Atol scheme. I think that's for the DfT.
Okay. Sarah, in your business stands to benefit possibly from the reforms if there's more companies move to trust arrangements. But do you see the case for wholesale reform of the existing Atol scheme?
Honestly, no. There doesn't seem to be space in the consultation to take feedback on that overarching issue. It seems to be that the consultation is on what form that the reform should take, and that the segregation of money is the preferred option. So to be honest, I haven't given that a great deal of thought. My thought has tended to go into how to deal with the segregation, how our business should react to that, and leave the rest to the people that know better than me on the generic aspects of reform.
And would you agree with Rachel and Alan that the sector's generally proved financially resilient?
I think there's reasons why the resilience was there after COVID, because there were merchant acquirers that stepped in to assist with refunding. There were insurers who took some of the brunt of the first wave of the cancellations. There was obviously the refund credit notes issued by the CAA. So without that intervention, I'm not sure how much resilience there would have been.
Okay, that's useful. Michael, you can't possibly respond to everything that's just been raised, but I wanted to ask you something specifically. Is there a case for the CAA to look at Atol reform in isolation from the review of the package travel regulations and the issue of airline insolvency? Because that's clearly troubling a lot of people in the industry, that it's not a whole package of reforms. Why do you think that the CAA must act on Atol when we don't know what's going to happen in these other areas?
Look, you're right, and there's been a lot of comments on this over the last couple of years, and as Rachel rightly pointed out, ultimately airline insolvency review is a matter for government, particularly Department for Transport, and that is not something that ultimately sits within the CAA's purview. We obviously worked with and supported the airline insolvency review work when it was completed, and supported the proposals that were put together as part of that. But ultimately, that sits as a governmental decision. at the end of the day, there are overlapping aspects here, and that is understood in the travel ecosystem. And we will and do continue to engage with the relevant government departments on this. But from the CAA's perspective, we still believe that it is right to look at how the scheme should be set up for the future. As to whether or not that dovetails into other areas that are reformed that you've already mentioned, in, I guess, is a question ultimately for those government departments to answer, and not one for me to answer, as ultimately we can't influence the final delivery of that. We're very conscious of that. We are very conscious of making sure that whatever is brought in as part of reform doesn't create additional complications or complexity the moment you've got different departments responsible for different aspects. We fully understand that, so we've got to think about how that sits in the ecosystem. It currently exists right now. We must remember that in terms of the way that we approach and manage the regulatory environment for licensed air passengers, and of course you've got the non-licensed side that's dealt with by other participants, and Rachel can talk about that, I'm sure, as well. So we currently have that within the existing ecosystem. We're mindful of how any changes could be brought in as other changes come down the line, but ultimately, we can only control what we can control.
Sure, but you could make a recommendation to the Department for Transport that it coordinate the reforms, the review.
We can make recommendations, but we can't ultimately drive that change. Yeah, and I think that's the key thing.
But have you done that? Have you suggested to the DFT that would be helpful to coordinate with the Department?
We talk to the DFT and the Department for Business on a pretty regular basis. DFT weekly. We constantly pass the feedback that we receive from industry, particularly around airline issues that we've seen over the last couple of years, as well as also the feedback relating to the airline insolvency review. So they're very well versed in that, and us providing them that feedback.
Okay, just one final thing on the sort of rationale for the reform. When you spoke at the Abta event, you said that the reform package wasn't a reaction just to the failure of Thomas Cook, as some people had suggested, that you had proposals on this you were going to introduce in early 2019. But of course, you were aware of Thomas Cook's parlous state throughout 2019, weren't you? So was the reform really to address the issues you could see with Thomas Cook and the issues raised by the failure of Monarch? It does appear that those are the two central driving forces, if you like, behind this.
I mean, ultimately, everyone's entitled to their own views and opinions on the matter here. But yes, the timing of the first consultation came after the failure of Thomas Cook, and in the middle of at the start of the pandemic. The rationale for the CA to look at changes to the Atol scheme stemmed from before Thomas Cook and wasn't a reaction solely to the Monarch failure as well. It was a reaction to and a reflection on the way that certain operators within the business, within the travel industry, were effectively financed and how they were capitalized, and that can introduce particular risks in relation to their resilience. And I think I'd also just kind of draw out a couple of other points linked to what's been mentioned earlier. One, within the request for information, we specifically ask for feedback and comments upon how we should be thinking about those businesses that are what you might call vertically integrated or have an airline within them. So picking up on Alan's point earlier, we're asking those questions. So we've had that feedback from the first consultation. We've heard industry comment on that, and we're asking for views on whether or not we should be looking at those businesses differently and how that should be considered. So we're not sitting here saying it's a one-size-fits-all approach. This is about trying to deal with an issue or one issue. This is about understanding the feedback that we've had, hearing the comments around different types of businesses, and looking ultimately to drive change or changes that take account of that. So I think it's really important to make that point and to highlight the fact that we have been listening to that feedback and asking questions around that, and that ultimately could lead to how the reform is developed. And I think the other thing to point out is I wouldn't disagree about the resilience of the industry over the last couple of years. The industry has demonstrated a real tenacity to manage the challenges that are being thrown at them over the last couple of years and during the COVID pandemic. And I mean, in the first 12 months of the sort of COVID pandemic, we saw about 34 failures, which was much lower than was expected. But as Sarah points out, there were a number of different measures that were brought in that supported businesses. And yes, I've heard firsthand the challenges around whether or not all of those measures supported the travel industry specifically in the same way it supported other industries. But there were measures that were brought in. And so I think it's still too early to comment upon the resilience reflected on COVID, particularly when you look at current insolvency rates generally across all industries, which are on the rise. So I'm not forecasting travel industry insolvencies are also on the rise, but if you just look at a general perspective of insolvencies were at their lowest during the COVID pandemic, and they're now rising as a general comment. So I just caution trying to demonstrate resilience only on what happened over the last 2 years. But what I'm not saying though is businesses haven't worked very hard through that period. They absolutely have, and we've seen that.
Yeah, Michael has a point there, doesn't he, Alan? And the industry has taken on considerably more debt through the pandemic.
Yes, there's no question about it. It's been an incredibly difficult period of time. But the reality is the vast majority of people got through it. Yes, they have more debt, but fortunately, business has been incredibly good in 2023. And I think we will see that the debt will be paid back slowly, perhaps, but it will be reducing. From now. The reality is nobody is in a position, as far as I can see, not to deal with the debt as it is. What they have done is reduce their costs. Everybody now has fewer staff than they had back in 2019. They're looking at every expense. Many businesses have decided that they don't need office space. All the staff are now working from home. There are lots of things that the industry has done to keep costs under control. And I think that's really important. People didn't just sit back and say, what on earth am I going to do? They took action to ensure that they were still able to comply with Atol regulations, which are tough. I mean, for a lot of large operators, they're required to keep minimum levels of cash in the bank at the end of every month, and they've continued to do that. And it hasn't been easy. But the reality is they do survive. And the reality is those that failed were probably some that were going to fail anyway. Yes, there were 2 or 3 times the number of failures in 2020, 2021, but it didn't kill off the Air Travel Trust. The Air Travel Trust is still there and surprisingly healthy.
Yeah, okay, very good. Sarah makes a very good point in a piece she's written for the current Travel Weekly, which if you haven't seen it, you'll have it later today, hopefully. That segregation of client money, which is at the centre of the CAA's proposals, is actually a central tenet of the regulatory framework for licensed professionals in all kinds of sectors. So lawyers, for example, Alan. So it's perfectly reasonable, surely, for Atol holders to be required to segregate client money, isn't it?
Well, that's a very good question. As solicitors, we have to at times make payments into the compensation fund because solicitors run off with the money, which is supposed to be in the client account. One of my best friends lost his business because the internal accountant had been stealing from the solicitor's firm for 11 years. I mean, it isn't a guarantee. Let me say, first of all, I'm not opposed to trust accounts. I was involved with part of setting up the trust accounts with travel counsellors. But to have an effective trust account, you've got to have very effective and very clear lines of control. And if you don't control it, if you can't be certain that the right amount of money is in the account on a daily basis, there's a risk that it'll all go wrong. And we've seen that in the past. I dealt with a failure of a business in 1994, which was offering holidays to the States for the World Cup. And the passengers eventually got to Orlando, which was where the first game, because England wasn't in the World Cup, they were mainly Irish supporters. And then they discovered the hotel hadn't been paid for, the coaches weren't there to pick them up, none of the tickets had been bought. The man had run off with all the trust money and paid for 38 people to go to his wedding in Barbados. It took the police 18 months to find him. None of the money was ever recovered. Because there was nobody else looking after the trust. Now, at least with people like Sarah and others like her, there is somebody overseeing what's going on. but the overseeing has to be very careful. It has to be very controlled, because if it isn't, it's no better than we have now.
Okay, let's come to the issues with trust accounts in a moment. But Rachel, just the principle of segregation of client money as a condition of licensing is a generally accepted principle, isn't it? Why shouldn't it be accepted in travel?
Well, I can say on behalf of Abta members that there's widespread opposition to mandatory segregation. And I think it was interesting when Michael said that some form of segregation is preferred in his opening statements, even though I'll also say what Michael said, which was no decision's been made yet. But at the same time, if that's their preferred route is some form of segregation, then I feel like that pushing members, or travel businesses generally, down, you are pushing members down one route. And I think that could be very, very difficult for members. And there's different types of segregation. Trust is just one of them. But I think you need to recognize that with those different types of segregation, there's different levels of protection, and the protections around a client account, I'll call them protections, very different to protections around a trust. So that's one of the things I'd point out. With Abta members, they can protect by bonds, segregation, i.e. financial failure insurance, i.e. trust or financial failure insurance. And I think that flexibility is great for members or for travel businesses generally, because they can work out what works well for their business model, for their cash flow. And I think ultimately, so long as the end consumer is being protected, and as far as I can tell, that is the point of Atol reform, is let's make sure the money's there to protect the end consumer in the worst case scenario. Does it really matter how that is achieved? And I think segregation being put on all businesses, whether it's 2% to 100%, is potentially very difficult. And I don't think you can overlook the fact that travel businesses will have to be able to access segregation methods from financial services providers. And I can't speak for Sarah or any other trust provider out there or any bank offering client accounts, but I think there could be challenges with travel businesses that find out they have to do some form of segregation, and they go out to try and get that capacity in the market. I do not know if it's there.
Okay, I'll come back to Michael for a response to some of that, Rachel, in a second.
Please.
Sarah, can I come to you? Because you in another piece you wrote for Travel Weekly, you made the point that there's no simple route to segregation and to trust arrangements. You said it would be long, difficult and painful for businesses to transfer. Do you just want to explain briefly why that is? What are the challenges?
Well, if you've read the article, that it goes on a bit. But there's four main areas that I've identified as being difficulties, and the first one really relates to the hybrid proposal that the CAA are making, and that is my concern, that there aren't the availability of bonds and insurance there at the moment to plug those risk gaps. So Alan did raise the point that trust accounts, if not run well, can be quite risky, and in order to plug those risk gaps, there needs to be bonds and insurance, and I do think that is a good way forward to provide the flexibility that's needed that Rachel's alluding to. But at the moment, I just don't think that the underwriters in the industry quite understand the mitigation that segregation or trust accounts brings. But I do think it will get there. There are a lot of administrative hurdles involved in running trust accounts, and they are different depending on the style of trading and the type of sales that are made. And I think that's going to be a challenge for large and small businesses, mainly around identification of the funds that need to be in the segregation, particularly for businesses that have licensable and non-licensable splits in their sales. Also, if we're talking about releasing funds from segregation in order to pay suppliers, they would need to identify the section of the payment that relates to the supplier and whether or not that's been paid, because again, that's relevant to risk. Also, there's the issue of pipeline funds, which this consultation isn't dealing with, but I think needs to be, really, because it's the same chain of supply, and if you protect by segregation at one part but not in another, then you risk duplicating the funds being tied, or you have gaps in the protection. So as it stands, if a principal wants to protect funds in a trust account, and they take bookings via an agent, and the agent takes some money, the principal doesn't necessarily know that it's being taken. They don't know whether they need to fund it into the trust account, whether the agent should pay it directly into the trust account. That there's a hole there that needs to be filled, and that's a challenge. There's the issue of cost as well, that I think has probably been raised quite a lot at Abta by Abta members and beyond. The costs associated with overcoming those administrative hurdles, and the cost of independent trustees. It's an additional cost. However, that said, for larger companies, those costs are going to be easier and more proportionately worthwhile for them, because the more sales that a company makes, the more cost effective a trust account becomes. So the problem's not the lower end of the market, it's the bigger end of the market. So small business Atol holders would need to be looking for a collective scheme to make it worthwhile and cost effective for them. But again, I think that those kinds of solutions will emerge. It's not insurmountable. And there are some teething issues still. Michael, I'm sure, would agree with me that there's the banks aren't quite there in terms of offering the security that's needed, and just that the clunky trust deed arrangements that have to apply to each particular Atol holder, and if there's a huge April the 24th rush, that's not going to happen. So it does have to be a slow approach, incremental, with a long transition period to overcome those issues.
Okay, let's come to the question of the start and the transition. Michael, can you address 2 or 3 of those specific points? If I go back to something Rachel said, so long as the end consumer's protected, does it matter? Why does it matter so long as the end consumer's protected?
Why does what specifically matter?
So long as the end consumer's protected by the financially, does it matter how that protection is provided?
Well, yes, it does. I mean, the Atol scheme and the protection that the consumer is getting ultimately isn't changing. But as I mentioned earlier on, what a consumer ultimately really wants, and that's why we're talking about all of this, is to go on holiday. So they don't want to go through the discomfort of having to claim money back because their tour operator has failed. They actually want their holiday in the first instance. So it's about making sure that the industry can deliver on its promises to consumers at the end of the day. The scheme stands there as that backup to provide the ability to provide that financial protection if necessary, but ultimately customers want their holiday. So this is what I'm talking about in terms of building out that that resilience rather than changing the ultimate financial protection. Consumers want their trip, and they want to book with a trusted holiday company at the end of the day as well.
Okay, and so your suggested reforms, you believe will make it more likely that the money is there for the customer to get their trip, and that companies will be more financially resilient. Okay. Right. On the question,
and Ian, sorry, I just want to go back on something else that Rachel said earlier on. Not sure if she was trying to cleverly twist my words, but we haven't made a decision, but we also have been asked in the past, what is the CA's view? So given we have been asked so many times, we decided to put out our emerging thoughts to encourage this sort of debate and to be able to get a more tailored response back to the questions we were putting out. What we weren't saying and aren't saying is that a decision has been made, but given we were being asked what is our view at that point in time and why, we thought it was helpful to set that out to encourage this debate. So I just want to be very clear that is the case, that there is no decision, and it's not semantics around words, as Rachel was perhaps indicating.
I want to come back, please, Ian.
Yeah, go on.
I wasn't twisting your words, Michael. You said, firstly, we haven't made a decision, and you did then say that some sort of segregation is your preference. And I think I would just say that on behalf of anyone listening in, and on our members, it's fine to say no decision's been made, and maybe it hasn't. But then when you do go down the line of saying, but the segregation's our preference, I think it's easy for people to believe that that's the way it will go, and that's the point I was trying to make.
That might be very true, Rachel, but when people ask, what is the thinking of the CEA, we think it's helpful to actually provide a response to that rather than just say nothing at all.
Of course.
I think people would like it if you were able to say more, Mike. And to be fair, the CEA's thinking has clearly evolved between the first consultation and the request for information. Just a couple of other points, Michael. On pipeline funds, Sarah's point that it needs to be addressed because it's part of the supply chain. You dropped the proposals for segregation of pipeline monies, or potential segregation of pipeline monies, for now, haven't you? But you'll come back to that, you've said.
Absolutely. Fundamentally, it's part of the cash flow ecosystem here, and we believe it is important. And ultimately, we want to make sure that the industry is treated consistently within that. The only reason that we have signalled what we signalled in this document, but equally we've asked for stakeholders to provide their feedback on it. So therefore, if there's a huge strength of feeling that might change, is a sequencing. So all we're doing is we're sequencing in relation to the changes that we're making to reform, followed by how then pipeline money dovetails into that. So we're just trying to find a way more simply to get to the decision around reform, and then how the pipeline money fits into it. What Sarah says is absolutely right. Ultimately, that's still consumer money that's being held. It's part of that journey of funds. So it is still fundamentally important to us. So it's sequencing only. We haven't said it's not important.
And since you don't directly regulate travel agents, this would be approached through the requirements in agency agreements with Atol holders, presumably.
Yes, that's how we'd expect to manifest itself. Yes.
Yeah, Alan, what are the implications of a requirement to segregate pipeline monies?
I think that's going to be a very interesting scenario, because I'm not sure that no matter what we put in an agency agreement, an operator, unless they become aware that an agent is doing something wrong, isn't going to be aware exactly what's going on, whether the money is being separated. We only have to look back at Thomas Cook's. It's not that long ago to discover they were collecting final balances a year in advance, and they were using that to keep the tour operator from collapsing. And the poor tour operators at the end of the day discovered that their risks were 10 times bigger than they'd anticipated. And a lot of operators lost a lot of money when Thomas Cook failed, because the agency side hadn't been playing fair. Now, nobody knew that was going on. Clearly, the staff at Thomas Cook's did, but they weren't saying anything. So allegedly, they were getting something back from it anyway. But the reality is, how does an Atol holder control what an agent does? It's very, very difficult. Of course, you can put anything you like in writing, but actually getting people to comply with it is a different matter altogether. Unless you actually have somebody in the agency watching what's going on, which we don't, there's no way of being certain that that's happening. Right now, I'm dealing with the collapse of an 8-branch agency in the Northwest, where supposedly they had a trust account. Fortunately, not with Sarah, but there's no money in the account. Now, where's it gone? We don't know. What's happening? We don't know. The statement of affairs published a couple of days ago says they don't owe anybody any money. Well, they owe one of our members £18,000. So, I suspect they owed a lot of people's own money. How do you control an agent? It's very difficult. I'm not sure that you can put the blame on Atol holders to do that. I'm not sure the CEA, since they're not Atol holders, have any control over it either. And I very much doubt that Rachel at Abta necessarily wants to have somebody watching what they're doing either. I mean, for agents, it could be even more difficult to have no cash flow at all, because that's what this effectively means. The agency business has traded very well, longer than tour operators. I mean, Thomas Cook's going since 1850, whatever. I mean, the reality is, in most cases, it works very well. I accept, when we look at TC and others, it happens in some cases, but the reality is the poor old principal has picked up the tab. and they look and decide what level of business they're prepared to do with each agent. But expecting them to be able to control what the agency is doing with pipeline money is very difficult.
Okay, maybe we'll park pipeline monies for now, since you're not proposing it at the moment, but that's something we can look forward to coming back to discussing, maybe, Michael, unless you wanted to say something at this point.
I think I just make one observation to Alan's comments there, is that with the advancements of technology and certainly discussions that I've been having much more recently, these types of challenges become much more easier to manage and identify where consumers and when consumers are spending money with particular travel agents. So some of the challenges you talk about there, Alan, and how particularly a tour operator might do that, the advancements we're seeing and the linkages with merchant services providers, etc., are providing ways and means to start to join all of those dots together. So I think it's important, as I mentioned earlier on, that what we think about is something that is developing fit for the future and not based on how things have been in the past.
Okay, we've still got quite a few things we need to get through, but one final thing that Sarah raised, Michael, the question of smaller Atol holders. The request for information document makes the point that smaller Atol holders who struggle to meet the new requirements have the option to join Atol accredited bodies or franchises and so on. Obviously, there are costs to that, but is that basically the avenue you see open to smaller Atol holders with what you're likely to bring in?
So I think that's one avenue that we see. Absolutely, franchises and accredited bodies provide a route for smaller businesses. Equally, I think Sarah mentioned earlier on as well that other participants might come into the market as well to provide solutions for these particular businesses. And in fact, I hear and have conversations with particular bodies that might be considering such a thing. But the other avenue is the questions that we've put in the document, again saying, should we be thinking about different sizes of businesses in different ways, and what is that sort of criteria? So what we're not saying again is it's a one size fits all, or you just have to go into a franchise or accredited body. We're asking the questions. So as I think this debate is all really helpful and really constructive, but equally what's really important here is the industry providing its feedback on these things to shape that. And if there's a strength of feeling around how businesses of a certain size or certain type should be dealt with as part of the proposed reform, and we think that also meets the objectives, then that well could be the solution. So the answer is no, that's not the only route, but that is one possible route for them.
Okay. Client accounts, Michael, I want to hear how you view client accounts, but first, if I can go to Sarah, you suggested client accounts weren't a great idea when you wrote in Travel Weekly. Do you want to explain why?
Well, they are growing on me, I have to say. It was a while ago that I wrote that article, actually, but I can see, having thought about it a bit more, I can see how they could work for smaller business Atol holders. But I'll start by answering the question, which is why I think they might not work. And the main reason is the lack of independent monitoring and control that Alan's alluded to and given the examples. And that's why I think trust accounts have had a bad name to date, because they've been run like client accounts by directors of the business. Once upon a time, not even that long ago, really, before the 2018 regulations, a director of the business could have been the trustee over the trust that provides financial protection. So that's moved on since the package travel regulations of 2018, and that's made them more robust. So I think that a client account solution would go back to that pre-2018 position, which I haven't seen any appetite for that at all. I don't think that they'd be that much cheaper in order to get to any kind of decent mitigation of risk, because they would need to be audited by a qualified auditor at least once a quarter to make sure that funds were moving in and out correctly. I imagine that they'd work in the same way as a solicitor's client account, so subject to accounts rules, which solicitors are subject to, which are quite tight, and they have to be in order to get them to work. So the cost in the accounts department who's familiar with them and can make sure that the reconciliation is happening. It's another cost implication, and really when that's all balanced out, they may as well join one of these hopefully emerging schemes for small businesses that will do that part of it for them at one cost. So that's why I think they're not a good idea, but I do see the benefit of the simplicity around that structure, mirroring the Solicitors Regulation Authority structure. Further down the line, I just think that the mindset in the industry would need to change before that might work. I mean, solicitors have always had client accounts as far as I can remember. I don't know about you, Alan. I can't remember.
I've only been a solicitor for 40 years, and we certainly had accounts 40 years ago, so I don't want to go back any further.
Yeah, so it's just you just don't touch client money when you're a lawyer, do you? You just don't do it, and I think that's the mindset that you have to have in order for that really informal process that to work. And I'm not sure that the travel industry are there. You can tell from the reactions that there've been to this consultation. They just don't see that there's a need to segregate money, and so an informal client account just won't work at the moment, but may do in 20 years' time, maybe.
Okay, a 20-year transition, that's what we're looking for. Alan, you welcomed the CAA's raising of client accounts, I thought.
Yes, I mean, I think there is a possibility there, but Sarah's absolutely right. It's all a question of monitoring, and there has to be very careful monitoring. So long as the money is going in and out to pay for the services that are being bought, then it's a less of an issue than it is running trust accounts, because you've got so many layers of people. You've got the organisation, you've got the trustee below the organisation or above it, and you've got to have a very regular examination of what's going on. As I say, right now I'm dealing with a failed business that appears to not put them. A trust account is only as good as the money that's gone in the first place. And that will be the same, I have to say, with a client account. If it doesn't go in the first place, it's not going to be there to help the consumer or the CAA when the business fails. So there is, I think, a possibility that Atol holders would find the concept of a client account less scary than trust accounts, and trustees who, if they're doing their job properly, will be questioning every single payment, because that's the way a trust account has got to be run. And I think that would cause problems. The only reason I'm speaking on my own behalf today is because the AAC has a consultation and survey that doesn't close until tomorrow. So I can't really say what they're going to say, but I've seen some of the responses, and their requirement to join an accredited body or a franchise doesn't appear to be particularly enthusiastic amongst them. But that's because they're all individual businesses who've always made the decisions themselves. And it really is a mindset change to expect people to have somebody else who isn't running the business telling them effectively how to run it. Now, if you started from that mindset, if you're a new business and you join Serenity to start and to provide financial protection, no other way. And I think it's a lot easier in that situation than if you've been a manager of a business for 30 years and somebody suddenly tells you, you can't do what you've done for the last 30 years because it's not allowed anymore. That is a real change. And I think getting people's heads around that is going to be quite difficult.
Okay, Rachel, what's Abta's view of client accounts?
We haven't formed a specific view on client accounts just yet. Similar to Alan, we're still going through our consultation process. We've started to draft our response, but we held 4 financial protection focus groups yesterday, 1 this morning. I've got 1 later this afternoon. I've got a couple next week. So just a caveat, we're very much still in the swing of it, but there's key themes throughout. What's come up on client accounts, certainly more from industry representatives that we've spoken to, is, I'm going to use a phrase which came up across a couple of them, ridiculous. They don't think that if Atol reform is to make sure that sufficient protection is there and is in place, a client account has high enough standards around it to make sure that it's properly run and the money is in there. So there is a strength of feeling that a trust would be a more reliable way segregating, but I have to caveat that that's a pocket of people that we've engaged with. And members, as I've said, they've already got various financial protection options available to them. Some members segregate money already, some more than others, and they do that in different ways. I think a couple of things have come up around segregation more generally, not just client accounts, but firstly on client accounts, will they be available to travel businesses that want them? I think Michael said he's engaging with financial services providers, banks, etc. I'd be asking the question, are you going to be up for providing a client account to a travel business? Because some of what I've heard from members who said they've approached some banks to see if it's an option, its computer says no. So I think that's something that's worth looking into. And secondly, something that's coming up as a theme is the cost of segregation. No matter how you do it, is going to be expensive. And something came up earlier around the complexity of them. I mean, requiring segregation in whatever form on top of another form of financial protection, and possibly on top of like a different APC, that is all additional complexity. Like there's no way of coming out of this saying that if it's segregation plus other stuff, which I think is the way it's going to go, that is going to be more complex and it is going to be costly. And I'm not sure, Michael may be doing it, it'd be good to hear. I'm not sure what analysis has gone in around the cost of segregation and the impact of that on the industry. And Michael touched on earlier resilience of businesses, etc. And so long as they've got the money, they can pay for the customer's holiday. Surely that's the best outcome. Of course, customers, I think you'll all agree, you pay for your holiday, you expect your holiday to be delivered. And yes, if the company fails, then you hope that you'll get your money back. But I think, there's wider impacts here, depending on the level of segregation and depending on any allowances around prepayments, there's a whole wider scope outside. Things like hoteliers overseas, and if prepayments are required to pay hotels, a lot of those hotels out there in whichever country rely on those prepayments to get through quiet periods and things. So I think you need to, when you're talking about resilience, it's not just the travel businesses protecting the end customer under Atol regs or PTRs, it's actually what impact could something like segregation and the inability to use money to pre-fund holidays have on suppliers out there. Because if the hotels can't survive, how is the customer going to end up having the holiday? So I think there's just broader considerations here that need to be thought about.
Okay, let's go back to Michael and just two or three of the things that have come up. Michael, how do you see client accounts working? I got the feeling when you spoke at the Abta conference that you were saying that client accounts would allow the entire sector to segregate client money to a degree, but they wouldn't necessarily meet the financial requirements of the CAA, and other financial requirements, mandatory financial requirements, would therefore sit alongside the client accounts. Explain to us, how do you envisage them working?
Yeah, thanks, Ian. If I stepped back slightly, and during the course of the COVID pandemic, this really came to light, actually. I don't know what Rachel's experiences were, but there were a number of businesses that actually couldn't point out the level of obligations they have to customers. How much money have they collected in from customers, and therefore potentially also how much do they owe in terms of a refund for that cancelled booking. And that brought to bear that actually there are a number of operators in the sector that don't understand that and don't have access to that information. There are equally those that do and could provide that information very, very quickly. But I think what it highlighted is the fact that if you as an operator don't understand that obligation, and then what is going to be a potential liability, whether or not ultimately it's to refund the customer or it's a liability in terms of the supply of the particular components of the holiday, then actually how do you as a business understand your cash flow? And particularly it's been commented to me and others that as businesses have sought to understand that, they've got a much better grasp of their underlying cash flow and liquidity needs. And so taking that and then stepping into your question, Ian, well, ultimately, and perhaps this is also connotations of client accounts and also maybe from Sarah and Alan's perspective, but all banks are subject to KYC and other normal requirements. are willing to open accounts for tour operators to pay certain funds in. That if you're paying in the funds that relate to the monies you're collecting from the consumer, you automatically know how much funds are going into that account and then why you're taking them out. So at a very, very basic level, effectively, you're funding an account with the money. Let's not get into timing of when it comes from merchant acquirers, etc. But you're understanding the money that you've collected from the consumer, and then you're understanding where you're paying it out to. Trying to do that from an account that is commingled, effectively all monies are sitting in, for example, one or two kind of current accounts. For most businesses, they couldn't give us that information. So at a very basic level, what this does is that starts to give us, as a regulator, an understanding of the cash flows of the business and where and how that money is being used. Is it ultimately paying the suppliers for that consumer A's holiday, or is it being used for different purposes? You know, this type of account in its own right, to pick up on something Rachel was saying earlier, isn't about providing ultimately a physical, tangible security over the monies. I mean, what Sarah and Alan said earlier on, if you're running an account of that nature, you've got no other oversight over it, and it's not going to provide a tangible hard security to realize on failure. But that's not what it's about. It's about better understanding the cash flow dynamics of a business and then being able to better understand the risks that any one business poses. And then what you can do on top of that is then build, if necessary, what security requirements, financial security requirements, might be required to protect against potential risk that one operator poses, with better knowledge of the underlying liquidity, the underlying free cash position, and the underlying obligations relating to consumers. That is not, and so that in itself, that type of account isn't about providing some form of security. And I think that's a really important point to make, because I completely agree with what Sarah and Alan have said about the risks of those accounts. Only if you've got something that is being overseen by an independent trustee and actually someone else is a beneficiary of that account on a particular event, are you more likely, but nothing's foolproof, to have those funds there on a failure event to be able to utilize for their permitted purpose. But that was not the purpose of suggesting the client account in inverted commas. The purpose was to try to suggest something else, which, based on the feedback we received from the first consultation, was trying to better provide the information that we need from a regulatory perspective and identify those risks and allow operators to demonstrate to us how and where they are funding themselves, because that was one of the key components of our original consultation around how customer monies are being used. So that's the underlying sort of rationale for that account. As you start to overlay more requirements about what is or isn't allowed out of that account and how it's constructed, yes, absolutely, Sarah, it becomes more complicated and more complex. But what we were trying to do, and as we indicated in our document, is these are options. They're not the only ways you could look at this, and effectively, again, ask industry to comment on, well, is there a different way you can do this? We might not necessarily fully agree with that, but actually there might be some really helpful comments that come back about how this could be constructed. And again, equally, do you apply that to certain types of business, certain sizes of businesses, reflecting on the variety of the industry? And for those that present a different risk or different size or different characteristic, whatever that might be, you apply different requirements, again, to try to take account of the various themes that we have heard from the industry. So it's trying to provide almost like a pathway of which you can kind of go from, well, you're just better understanding the cash flows of a business, I guess, to all the way to, a trust account which is effectively 100% funded. I don't want to get into a discussion about that because that was never the stated purpose of the consultation. But of course, that is one route. But it's about providing, I suppose, those polar extremes and then the shades in between.
Okay, so that makes sense to me anyway. With a client account would not provide a tangible security. What do you say to Sarah's point earlier, that when it comes to trust accounts, financial service providers don't understand the security they provide and adjust their requirements accordingly? How do you address that? Is the CAA in consultation with merchant acquirers, financial service providers, explaining to them, trying to get them to change their position, their attitude to trust arrangements?
Well, we have regular dialogue with payment services providers, and we've encouraged all of them to engage with us as part of this reform process. A number have come to us and said, we want to engage and we want to discuss. We've encouraged that. Not all of them have actually decided to come to us in the end. So the rhetoric is there, but the action isn't. We're doing our best to engage with them as much as possible. I think what I would say is, as trust accounts have become, I suppose, more common over the last couple of years, there's an increasing understanding. It's building from a low base within the industry. Trust accounts weren't widely used within the travel industry if we cast our minds back, a couple of years, and still, in absolute terms, they're not widely used. They're not mandated apart from accredited body arrangements from an Atol perspective. But the knowledge within some merchant acquirers is building. But because there's been a proliferation of fintech businesses coming in and being effectively payment services providers, they're not merchant acquirers, but payment services providers. There's far more operators now in the industry, and the emergence of these newer players means there are newer businesses that need to understand this, and we're happy to engage with them. But I guess as travel businesses perhaps move around with their providers, then there becomes a sort of an ongoing educational piece. And if trust accounts or some variant of were to become the framework moving forwards, make the word were to become the framework moving forwards, then there is something around how that educational piece for these providers needs to look. But of course, as you get new providers coming in, there's only so many you can be continually, engaging with, and it's got to be sort of a two-way street as part of that. So it's building. I'm not going to say it's perfect, but that knowledge and understanding is building. But of course, as with everything, there's always more you can do on that.
Okay, and in response to a point Rachel made earlier, have you looked at the potential costs to businesses of the various proposals? I'm assuming there'll be, this will be one element of the consultation we see subsequently, but have you done any work on that?
We have. We absolutely recognise that, I wouldn't say it's just cost of trust accounts. I mean, if you decide to go with bonding, we don't have a mandatory bonding regime from an Atol perspective currently, but a bond is a cost to a business. The APC is a cost to the business. So whatever it looks like, there's a cost of all of these different components. And so absolutely, that is one of the functions and criteria that we are considering as part of the options appraisal. And that's set out within the document as well. And, again, without kind of wanting to labour this point, we're asking stakeholders, are we considering all of the right factors? Are there different things that we should be taking account of? We're not saying this is everything and therefore we've got it. We're saying, tell us if we're missing something in relation to how we're appraising these options. Yes, we have already got cost on there. Absolutely we have. But are there other things we're missing? Then do tell us. But I should be clear that it's not just the cost of a trust account. People tell me that bonding is, and Rachel will know this, with her members in relation to the bonding. Bonding is expensive as well.
Okay, I'll let Alan and Rachel come in about cost in a second. But can I just ask you one thing about the APC? So you're looking at a variable risk-based, but how the risk-based is judged, we have yet to find out. If the APC varies, say, by the percentage of money that a business is segregating, that seems fairly clear, people can understand that. But if it varies based on the CAA's assessment of the type of business model, that's more subjective, isn't it? So are you going to avoid the latter and look more towards the former, or could it be something that might be deemed subjective?
I mean, ultimately, we said that it could be more subjective based on kind of a risk criteria, but within our document we've set out that I suppose that risk framework would ultimately be looking at the leverage of a business, and in that case looking at the assets versus the liabilities of the business, which, assuming that the accounts are correctly stated, and for those large businesses that are required to have their accounts audited, they will be audited and corroborated by an auditor. So that is to try to remove that subjectivity, because I think the last thing anyone wants is increased subjectivity around this. So that's trying to make a kind of a risk-based assessment tangibly clearer to any particular operator or any other participant within industry, because you can just look at their financial statements rather than it being, oh, it's this type of business or operates in this type of market, or it's got this type of concentration risk with suppliers or customers. All very valid factors from a credit assessment perspective, yes, but again, all of that is subjective.
Okay.
And so we've not gone down that route.
Okay, we need to draw to a close, and I'm aware we still haven't talked about the start and the transition period and so on. So, Michael, you've identified April 2024 as the start date you'd like to see. Alan, is that realistic? Can you see that happening?
It depends what it is they're expecting to happen on the 1st of April. If they're looking to get people to move into trust accounts on the 1st of April, no, it's not. And Sarah's already said, in practical terms, you couldn't get 1,500 or 2,000 Atol holders to move to trust accounts in one day. If we're looking at a variable APC, then yeah, and that clearly would be a possibility. And we know from the CA survey of consumers that the consumer would be quite happy paying £10 per head for consumer protection rather than £2.50. So if they're looking for a short-term protective position, then moving to a variable APC and increasing it, even increasing it to £5 for everybody, wouldn't be a problem on the 1st of April, because ultimately the consumer pays it, and that they don't have to know how much they're paying. In fact, they don't seem to be particularly concerned, and they're not particularly concerned how money is protected. They just want to know that it is. So changing APC on the 1st of April, not a problem at all. Moving to trust accounts, for example, and that I think was clearly their original intention. They just got horrified at the 300 responses to the first consultation, most of whom threw their hands up in the air and said, please don't consider this because it's not a realistic option. Which is why they suddenly said, oh, we were never saying it had to be a trust account. But that's really what they were saying. They just aren't prepared to say it now. I can see Michael smiling and saying, God, don't say that. But I have. So, yeah, we can see some sort of change, but looking for fundamental change to moving to trust accounts from the 1st of April, no, I don't see that being a feasible option. Because look at the timescale. We have to have a full 3-month consultation when they reach their decision. And I suspect that if the consultation says we're going to have segregated accounts, there's going to be one hell of a response to that. And so, we're not going to see anything positive as to what's going to happen, probably before Christmas or January next year. And expecting people to change the way they do business in 3 months is not a realistic option.
But Rachel, what's realistic to expect might be in place by April next year?
I think that's very, very difficult to answer without knowing which way this is going. And I just think the more fundamental the reform, the longer the transition period is needed, really. So, on a variable APC, just to go back on something Alan was saying, based on what we're hearing from members, I'm not convinced that would be achievable by April. It may be, but I think it depends on how that would be introduced. So, for example, if, let's say, the CA say, let's do it on a percentage of the value of the trip sold. Now, we've got businesses selling for holidays in 2025. They've already sold them. So if you're going to bring in variable APC on average price of trips sold and it's forward looking, that's possibly okay, although I'm not going to say that definitively, and people have priced things and got marketing leaflets and all sorts out there. But if that was to come in, retrospectively, it's just not feasible. You've sold the holidays, you've told the customer the price. So I think it comes down to the detail. And I know Michael said before, we can't really get into that detail until we know which way we're going. But I think the issue that members have is if they had a bit more of the detail, they could provide more constructive feedback around what would work for them and what transition period they'd need. So I know it's like what comes first, chicken or the egg, but that's a bit of an issue. The only other thing I wanted to touch on, I know we need to wrap up, is on costs. So, I mean, you said around, Michael, bonds being expensive. Actually, members have got 3 options at Abta: bonds, trust, insurance. And a lot of them come back and go, do you know what, actually the bond's cheaper. I'm just going to go with the bond. So I think it's not correct that they're entirely expensive. I'm not saying don't go and do a trust, of course, because they're brilliant for, a business model that works with trusts and a business that can get access to the trust. The only other thing we haven't touched on at all is capacity in the market. And where we're at in terms of capacity for insurance trust bonding is very different to how it was when the first paper came out. Abta have approved 2 new bond providers this week. The appetite is there. There's another FFI provider coming out. We've now got members in membership who operate with a trust. So the appetite is out there. And when we've had our financial protection workshops, and I'm disappointed to hear that Michael doesn't seem to have had masses of luck with the FS market, because we've had 14 financial service providers in our workshops, banks, insurers, merchant acquirers, bond providers. So quite a number. What's coming out of those is that if the demand is there, e.g. for bonding, they will bring the bond capacity to market, and it would actually be more appealing because there would be a more diverse range of businesses out there seeking bonding, and therefore their risk appetite would change. And similarly, I'm sure, Sarah would love to see increased appetite for trusts, of course. So what's important is engaging with the FS providers out there to make sure that if the CA goes a particular way, that there's the capacity is there. But I would say things are looking up on bonds and insurance, and I think they remain viable options, and I think options are important.
Okay, that's a very good point. Sarah, if you'll forgive me for a second, I won't come to you because you've already said it needs a slow approach.
I will say though that because we haven't touched on this, we haven't touched on escrow accounts, and I think that the beauty of segregation is that it's flexible, and that helps with transition. This needs to be a long transition, and there needs to be a change in mindset, and I think escrow accounts address a lot of the difficulties that I addressed in earlier on in the session relating to IT and segregation of identification of workflow, things like that. But they can be the percentage of funds in escrow can be increased over time because it's quite a simple model, and that would be a good method for transition when supported by a bond. And I'm encouraged to hear that Rachel says that the bond appetite is there, because you could start a business on a small percentage of escrow with a bigger bond, and then over time reduce the size of the bond and increase the escrow, and that wouldn't be such a shock to the system.
Okay, that's a very, very good point. Michael, coming back to you, you suggested at the Abta event that there could be a day one approach next April. What does that mean exactly? What sort of start might we see next April, if indeed we see a start in April?
I think touching on what Rachel just said, devil's in the detail, and that detail isn't in a position to be outlined yet, because we don't have that that final decided approach to move forwards. And I understand the sort of the chicken and egg dilemma. It's not lost on me, but the point is that in order to shape this, we need some sort of feedback, and the feedback that we received to the first consultation was, we can't do this, we're not doing this. This is about actually constructive engagement to help shape the proposal, moving forwards. Then we work out exactly how that can be implemented. So my comment, at the event two weeks ago was, one, we want to signal that we want to move forward on this. So as much as the industry doesn't want to kind of be dragged into something quickly, the industry equally wants certainty. They want to understand timing, and they want to be able to plan. So we felt it was helpful to signal our intent of a start date for the beginning of that transition period. And as I said, and as I said before, and kind of Rachel said earlier on, the extent of any change will determine then the length of that transition period. We're not going to expect everyone on the first day of whenever it is. Using the 1st of April isn't great because that's April Fool's Day as well. But the first day of any particular month for every single business to have transitioned to whatever that particular change is. We recognise that there is a need for businesses to adjust, but we want to signal when things might start to come into effect. So by sort of saying a day one event would be when businesses could start to avail themselves of the new APC framework or the new licensing framework, and some will move quicker into that already perhaps be in that sort of position than others. And so then it's about how everyone moves in tandem, but of course people are going to run at kind of slightly different paces, to ultimately achieve and move towards that, you know, that final framework, whatever that final framework looks like.
Okay.
But we don't think it's helpful to not give a potential start date, because otherwise another question becomes, well, when are you going to start this? A bit like, what is the CA's view? You know, if we don't say anything, we get asked. If we do say something, like, well, that's not achievable, you shouldn't be saying that, you've already made a decision. So you're kind of damned if you do, you're damned if you don't. But we think it's helpful to provide that indication.
Michael, I think you're damned either way. That's undoubtedly true. So what sort of maximum period of transition would you be looking at if, for example, you know, Sarah's example of a progressive move to an escrow model backed by a bond, but in, you know, segregating an increasing amount of money in the account? What kind of transition period could you envisage?
I don't think it would be appropriate for me to answer that or give a guide, because at this particular point in time there are so many different options on the table that it's really quite difficult to give a time frame on that. Okay,
but Sarah does this for a living, and she says it requires a slow approach. So can you reassure her?
Yeah. I'll tell you what you can do. I mean, you can ask the participants, you know, their particular views, but I think from the CA perspective, it wouldn't be right to give a maximum date or anything else at this stage.
Okay, Alan, what transition period do you think is necessary?
Well, in our first consultation from the first CA consultation, the majority were looking for something in the region of 5 years if they were having to move to the full trust, because of course that's what it appeared the CA were proposing in the first consultation. If there is something looser than a full trust, if it's a client account plus something else, then it may well be a shorter period. But this is, I think, as we said right at the start, potentially the biggest change to the Atol scheme since 1973. I think we have to recognise that businesses are going to take time to find the way to comply with it, whatever it happens to be. This is the problem. We don't know what it is.
Okay, 5 years. Rachel, Abta said 5 to 10 years.
On behalf of members, 5 to 10 years in response to the first part of the consultation. I think now what we'd be saying is, well, I'm not saying that that's invalid, because we're no closer to knowing where we're going. So I'll keep that line. But like I said a minute ago, I think the more fundamental reform, the longer the transition period is needed. I think a key thing here is coming back to the financial services providers, because I think the transition period is going to be reliant on, dependent on the volume, the amount of demand out there from travel businesses to the FS market, the scale of the change, the availability of the services and products that members or businesses are going to have to go out and find, depending on what the CAA say, and the capacity to do that. And when I've said to financial services providers, and like I said, I've asked 14 of them, what are you doing? Are you looking to produce new products, new services for travel businesses, depending on what might come out of the CAA Atol reform consultation? They all say, we can't even start to think about that until we know which way they're going. We've got no way of knowing which way they're going, so we can't even begin. And I think that is a really potentially big problem if the outcome of this is that travel businesses need to do X in terms of segregation, for example, and the answer's not out there at scale. I think that could be problematic. So, Michael, keep nagging those financial services providers to take you up on the offer, please, because I think it's a key point.
Okay. I think it's broad, but it's broader than that, Rachel. It's not just, I mean, it depends what you characterise as financial services providers, but equally also depends upon whatever the change is. I mean, actually, it might not be that reliant on whatever you're characterising as financial services providers to be providing a product. Ultimately, it does depend. But I think it is also really important to highlight that, I mean, you talked about flexibility earlier. We have highlighted that there are a number of different options around how ultimately monies could be protected. We haven't said that bonding is out the window. We said bonding could sit there. We said that trust accounts could sit there. We've also talked about, you know, insurance as well. You know, we've operated both bonding and trust accounts for, you know, quite a long period. Obviously, trust accounts longer than Abta have been recognising them. So we see that as different components that can sit alongside each other. So I want to be really clear, because we talked a lot about segregation, but within this document, within this request for information, we are still highlighting there are a number of different ways that this could ultimately be put together.
Good.
And Sorry. I was going to say on that point then, the question to, and by FS providers, I mean all of the merchant acquirers, banks, insurers, bond providers. The question for them is going to be, how will that impact your risk assessment to providing terms to travel businesses? Will you consider segregation as a mitigant and therefore better risk, and then be able to provide better terms? Things like that, I think are worth going down the route of in those conversations.
Okay, Sarah, quickly, how long a transition period do you think is necessary?
I think there's quite a few. There's probably more out there than you realise in a SCRO already. That's not that difficult. I think there'd be a fairly large proportion, particularly those that are already running client accounts, that could go into a SCRO around the April 24 mark. The rest of them that aren't used to segregating money in that way are going to need a longer run in, and that 4 or 5 years.
4 or 5 years. Okay, so it looks like 5 years is a reasonable industry view. Michael, one final question, and then I'll let you all go. When are we likely to see the follow-up consultation?
The follow-up consultation this year.
Autumn?
This year.
It's not going to be before the summer, is it? So autumn.
I'm not going to comment this year.
Okay.
As quickly as possible, Ian, recognising my point earlier about certainty for the industry. Good.
Okay. Look, thank you so much, Sarah, Rachel, Michael, Alan. That's been a really useful discussion. I learned a lot. So that's terrific. Anyone in the industry has got another week to submit responses to the request for information. So the deadline's a week tomorrow, March the 24th. Get those responses in. Thank you so much. Bye.
Thanks, everyone.
Bye.
Thanks, Ian.
Bye.